and then leave the rest of the time for your questions. And certainly we won't be able to get probably to all the questions, but as Teresa said, you can contact us and ask for a connection to one of our counselors. First, I want to talk about the differences between for-profits and nonprofits. And it really is important to understand that if you're starting from scratch and creating a nonprofit organization. For-profits have as their primary goal to earn money and profits for its founders, executives, and employees. And it shares revenue after paying expenses and taxes with stakeholders. If they're a for-profit, if they're a public corporation, they pay stock dividends, or they pay a certain, if they're not a public corporation, they pay out a certain amount to stakeholders, people who invested early in the company. In contrast to that, a nonprofit focuses on social or charitable benefits for the community that it serves. Examples are educational organizations, healthcare, social services, cultural, environmental protection, a whole range of sort of non-business organizations that serve a broad community purpose. A nonprofit can be as small as, say, under 10 employees or exceptionally large. In Boston, Mass General Hospital, a multi-billion-dollar nonprofit corporation. The Museum of Fine Arts, and the Boston Symphony, Harvard University, another multi-billion-dollar organization. These are nonprofits in a different category of nonprofits, but they fall under the same section of the Internal Revenue Service Code that relates to nonprofits. And these organizations don't distribute profits. Any profits that are earned are reinvested. And in fact, a better word than profits is surpluses. If you have a surplus at the end of a budget year, you reinvest that in the organization and use it to further your activities. Nonprofits also receive certain tax breaks, and I'll get into that in a moment. So let's talk about things that you need to consider in creating a nonprofit. Aside from the actual effort to legally establish the organization, funding is very important. For-profits raise capital from investors. Typically, for-profit investors help start the company and keep it growing. Investors receive a share of profits made in return for their investments. Nonprofits, by contrast, seek donations from individuals, corporate giving programs, foundation grants. And donors to a nonprofit don't get any payback for any financial payback. It's a pure donation. In addition, an additional source of funding for nonprofits would be grants or contracts from government. There are a wide array of government programs that provide grants that support certain types of activities among nonprofits. And also there are contracts, and by contracts, these are relationships between government agencies and nonprofits to deliver certain types of services. So the responsibility, for example, in the Commonwealth of Massachusetts, for social service support or educational support comes from the state, and it puts out a bid for applications to receive contracts to deliver the actual services. Most government agencies don't do direct service delivery. They rely on nonprofits that are equipped to deliver services. So, for example, a social service agency that works with the homeless or with low-income families or with child development, this money is contractual in most cases, and it comes from the state. And that's another source of revenue. In fact, for many organizations, it's the primary source if they are delivering services, particularly within low-income communities. Another key difference is mission or purpose. For-profit companies provide products or services to consumers, and they make a profit in doing so. Nonprofit's purpose is to provide benefits to a community with no intention of earning a profit. They focus on improving the social aspect of their community and not making money. They also have different audiences. In most cases, for-profit companies have a specific defined audience that they target to sell their products or services. Many for-profit businesses work carefully to identify the ideal customer and then devote resources to ensure that that population knows about the products and services that it provides. Nonprofits have a much broader audience. They have to appeal to a market that includes donors, potential donors, the community that the nonprofit serves, consumers who require or desire a nonprofit's product or services, and they're volunteers that work with the organization. Leadership or governance, this is an important aspect of nonprofit, particularly nonprofit activity. For-profits, in for-profits, leaders typically have a financial stake in the company's success. It might be a single owner, a group of owners, or stockholders. In the case of a public company, they are concerned primarily with increasing the company's profits. In a nonprofit organization, governance is normally the responsibility of a board of directors that can receive no financial benefit from their affiliation with the organization. Instead, their job is to guide the organization in considering how well the company or the organization meets its mission and finding ways to improve outreach. This is a big area. I don't have time to get into details today, but we can certainly provide information about board development, and that's something that you may want to consider. Also, the culture of nonprofits typically varies from that of a for-profit. In a for-profit, company focuses on how to improve sales and profits, purely and simply. Organizational discussions and the overall group mindset focuses on the best ways to meet financial goals. In a nonprofit organization, the culture is more community-minded. Instead of talking about ways to make more money, leaders and staff spend time brainstorming ways in which they can further benefit the community and increase their effectiveness. Taxes are a key difference. Tax law, in most cases, for-profits must pay taxes on their business endeavors and profits as stipulated by federal and state governments. Nonprofits receive a special designation from the federal government, usually by registering as a tax-exempt organization. I'm sure most of you have heard of 501c3. That's a section of the Internal Revenue Service Code that relates specifically to nonprofit organizations and sets out all of the requirements for qualifying to be a tax-exempt 501c3. Once approved as such an organization, they receive tax benefits not available to for-profit companies. One of the major benefits for funders is that contributions to tax-exempt nonprofits allow the donor to take a tax deduction. So if you give $1,000 to a nonprofit that is a 501c3, you get to deduct that $1,000 from your individual tax return. Foundations are also 501c3s, and the grants that they give are subject to the same laws. I would caution that when you're dealing with issues like this, it's really important to consult with a tax professional because circumstances vary. Another key difference is ownership. For-profit companies have different ownership models, but the physical and intellectual property the company uses is technically owned by whoever controls the company. In a nonprofit, there are no true owners. Nonprofits are publicly owned entities, particularly because of the way they benefit from federal oversight. And none of the physical intellectual property can benefit a member of the organization as compensation. Whereas in a for-profit company, of course, compensation is a key element of investing in employees and in rewarding performance. And lastly, but certainly not least important, is accountability. Most nonprofits, because they're tax exempt, are required to file information about their financial and business practices with state and federal governments to account for their activities. Nonprofits do this annually by submitting what is known as the IRS Form 990. And that has to be filed every year. In Massachusetts and other states, you have to file an annual report with the state as well. For-profits report their activities principally through their tax returns. And over a certain amount of revenue, nonprofits and to some extent for-profits are required to have an audit. which is typically required by funders. And again, it's important to talk to tax professionals when you're getting into the matter of tax filings, reporting, and so forth, because it's very easy to get into trouble if you don't do it properly. Now, there are a lot of subjects that I haven't addressed in these opening remarks because there's a lot of information that you need to have at hand when you are looking to create a nonprofit, from something as fundamental as registering with the state, applying for 501c3, creating a board of directors, creating program operations. It's really quite involved. And rather than anticipate questions you may have in my comments, I would like to now take any questions that you may have and see if I can be responsive. And if I can't, we'll find out how to find a way to get that information to you. Teresa, open the door.
You're ready for questions, huh?
Yeah.
Okay. Are nonprofits subject to the same employment rules, laws, and taxes as a profit?
They are principally, they are subject to the same rules with respect to employment, for example, as they relate to discriminatory practices, equal opportunity employment, and so forth. As I just said in my comments, taxes are treated differently because nonprofits don't have to pay taxes on the revenues that they receive for conducting their program operations. But there is a slight exception here that I've encountered before. If, for example, a nonprofit owns a building and it carries on its operations, program operations out of that building, but it has, let's say, ground level space that it uses for renting to retail companies or stores, the revenues that it receives from its retail tenants is taxable and has to be accounted for in a separate tax return. It's called non-related or unrelated business revenue. So in other words, it's not related to your mission and purpose as a nonprofit, and you have to pay taxes. But very few nonprofits, certainly small and medium-sized ones, run into that into that exception. And I don't know if I captured every item in that question, but those were the ones I remembered.
Okay. Karen, if there's anything else he missed, please go ahead and enter a new question. Okay. I have two questions that are probably somewhat related. How many people do you need on a board of directors? Or how many people do you need to start the nonprofit out?
Well, that's a good question. I think as I recall, the state and the IRS want to see who your officers are, and you can have as few as your office and board members. You can have as few as 3, I believe, to get the organization endorsed, registered and endorsed by the Internal Revenue Service. But to have an effective nonprofit and the kind of governance structure that you need, there's no single number, but I typically recommend, depending upon the size of the organization, that there be anywhere between 10 and say 25 members. And that has a lot to do with size. And if you're an organization that relies heavily on raising money, then you want to focus on board members that have the capacity to advance the fundraising process. It's a very labor-intensive process. One of the things that you want to keep in mind is how you balance the number of the types of board members. You want to have board members that will help serve the needs of the organization. So having people with experience in fundraising, having at least one person who may be from the advertising or marketing sector and can provide assistance and make connections to advance the mission of the organization publicly. Having a financial person, somebody that works in the financial services industry or as an accountant, can be very beneficial. It really depends on your needs, and you develop a board over time as your operations expand. But having a board that takes responsibility for particularly the financial oversight of the organization is very important, and it shouldn't be something taken lightly. A founder of an organization that recruits his or her friends to serve on a board may be creating a real challenge down the road unless those people bring the kinds of experiences that I just alluded to. You want to reach a broad array of people who can benefit what you're doing.
If you start a nonprofit, can you earn a decent income? Can the board members also be paid employees?
No, I cannot tell you specifically that there's a prohibition against payment, but it's really strongly frowned upon. Board members are volunteers and they're not to be paid. Even people who volunteer as non-board members to assist an organization should not be paid unless they become employees, actual employees of the organization. I know that the Attorney General's office in Massachusetts has been known to take action against boards that pay their members salaries. That certainly happened with a number of major foundations, which have created a very insular culture over many years, and they take some of their assets and use it to pay people for serving as trustees. It's really seriously frowned upon, and I would strongly recommend against doing that.
I have seen profits create a not-for-profit subsidiary. Have you ever seen the reverse where a not-for-profit creates a for-profit? For example, an entrepreneur incubator nonprofit that creates an angel fund?
You know, I think that's possible. I know it's possible, but I don't know the legal issues that have to be addressed. As you indicate, there are for-profits that create nonprofit subsidiaries or entities within their company. One of the biggest examples I know of is Fidelity Investments, which about 30 years ago created something called a charitable gift fund, which enables people to make charitable contributions to individual funds in their names, and Fidelity invests the money, and the money is then used by the donors to make grants to nonprofits. The money no longer belongs to the donor, but the donor exercises an unofficial control over how the money is distributed. I've been actually working with a man just in the last couple of weeks who's trying to, who has a for-profit business and wanted to create a nonprofit subsidiary to expand his, to create a subsidiary business that would be a nonprofit. And I told him after looking into it further that it was just too complicated. And what he's pretty much decided to do is to convert his entire operation into a nonprofit. So he would take his salary, the salaries of those who work with him, from a new organization, which would be a 501c3. This is still very much in process, so I'm not really sure how it's going to come out. But I do think you have to be very careful how you do this because the IRS will take a close look at it.
Okay. What are the qualifications for the board of directors? Do the board of directors need to be from the state of Massachusetts, for example?
No, you can have board members from almost anywhere. Qualifications are pretty general. As I said a moment ago, you want to find people who can provide services or by virtue of their experience to help professionalize, if you will, the organization. So I've done a lot of board development work over the years. And one of the things that I recommend strongly is that organizations create essentially a board member job description. What we expect of our board members, what kinds of experiences, and then go out to find people who fit the needs of the organization. Board members who simply attend meetings and do little else are not of any value to the organization. And it's really important to keep in mind. I've seen very good boards with a great deal of involvement and board members who understand and value the opportunity to assist the agencies with which they are affiliated in doing their work. So that's why, for example, having a financial services person who knows a great deal about tax law, just to take one issue, is very valuable. You really arguably don't have to go out and hire somebody to give you that advice. On the other hand, you have to be careful that the board member that the information that you're getting is.
I think you
Financial responsibility.
Okay. You kind of froze there for a moment. Sam, why don't you go ahead and turn off your video camera so we're just listening to you on mic. Maybe the bandwidth will be able to handle it better. Oops, I've got you. We seem to be frozen here. Assuming it's frozen for everyone and not just me. If somebody wants to put that into the chat real quick. It's like we just lost him. Yeah. Okay. Hopefully he will join us again here real quick. Thank you. Thank you, Fred. Thank you, everyone. Yeah. All right. Let's see if he can, if he is able to rejoin us or not. We'll give him a few minutes. Thank you for your patience. Okay, we have you back. You can hear me, Sam?
Yeah, I hear you.
Okay, I'm gonna go ahead and keep your video off. That way, hopefully it'll be able to handle it
That's fine.
better. Okay, all right, let me
I'm
get
tired
back.
of looking at myself anyway.
Okay. Oh, do you recommend, how important are term limits on a board? And if you have a current board system that's open-ended, how do you convert it to term limits?
Well, that's a good question, something that I've been very much involved in personally as a board member. I believe strongly in term limits. I think it's important to get new blood on a regular basis. And I worked, there were two boards on which I served for a long period of time. In one case, 11 years, another case, 12 years. And I took charge of an effort to revise our bylaws in both cases and built in a term limit section. I think it was a board member could serve no more than 3 terms. That could be 3 or 4 years. And I believe strongly in that. And I have to say that when my time came and I had to leave the board, it was somewhat bittersweet, but I believe that that was something that was right to do. And so I strongly recommend that. And as to moving people who've been on the board for a very long time, I think that you have to first create a provision in your bylaws for term limits. So you're starting to send the message. And then I think you approach a long-serving board member who you would like to see move on and say, we're going to the nominating committee is recommending that you get 1 additional term and then phase out. Some organizations create what I might call an oversight board. It really has not too much responsibility. It might be a board of advisors or a board of overseers, but it doesn't take the work of the actual board of directors or board of trustees. And so it provides a landing spot for people who leave the board, and they can stay affiliated. They just don't, and they're welcome to come to board meetings, but they don't have a vote. And that's what I would recommend, and in fact, participated in a number of times in addressing people who had served more than 30 years, in one case, more than 40 years on a board.
Are you still there?
Yeah, I'm here.
Okay, great. When is it appropriate for a non-paid executive director to begin to take some level of compensation in a new nonprofit organization? Is there any guidance that you can give with respect to what percentage of the organization should go to management compensation?
I really don't have a number at the top of my head. I think that should be a priority for the organization to pay the CEO. In many cases, I suspect the CEO is a founder, run into that many times, who's willing to go without compensation for some period of time. And I would say it's an issue that should be reviewed by the board, at least on an annual basis, if not more frequently, as you get a better picture of the revenue and expenses of the organization. And when you reach a certain level of revenue, then I think it's very appropriate to start paying compensation and providing normal benefits. That's basically what I have to say on that.
Okay. Are there any benefits for nonprofits to create separate ownership entities for real estate holdings, for example, an office building?
Yeah, I've heard of that. I'm not certainly very conversant in it, but there are examples that I've come across where a nonprofit will they may own a piece of land, will hire a developer to develop the land into, say, an office building or a set of retail stores as a way of producing more income for the organization. Even though you may have to pay taxes on that even though you have to pay taxes on the revenue derived from that unrelated business revenue, you're still ending up with a significant amount of additional revenue that you can plow into the business operation. And I think that's a very common approach that nonprofits take. They obviously have to have the asset to develop, but it does make a lot of sense, and I could cite a number of examples of it from my own experience. So yeah, I think it's certainly something that should be considered if you have vacant land for one thing.
Is it typical for executives or board members to be required to donate money to the organization?
No, it's not, and I think it's a nice thing for staff members from the executive director on down to make contributions. But I've strongly, having been in a situation like this many years ago, where the CEO put pressure on me to make a contribution, which I found distasteful. I think it's crossing the line and ought to be avoided. There's nothing wrong with it legally, but it's certainly not appropriate to put an employee in a situation.
The way a nonprofit functions, is it the decision, are those decisions voted on within the members, or is it the board of directors' responsibility?
Well, it's the board of directors. It's a governance process, and it's the board of directors. Now, if it's a membership organization, let's say it might be. I know this is true of religious institutions, churches, temples, where there's a large membership, but they are represented in various forms, but particularly by a board of trustees. They essentially delegate to the board of trustees the right to make decisions of that sort. It just depends on the nature of the organization. Generally, for most organizations, non-membership organizations, it's the board of directors or board of trustees. These terms are often used interchangeably, but most often it's board of directors. They don't have members, and therefore their responsibility they've been delegated responsibility by the bylaws to make certain decisions.
Can you tell us the difference between a 501c3 and a 501c4?
It's a good question. I'm not sure I will answer it accurately, but a 501c4 is, for example, there are political organizations. You're seeing a lot of this with political action committees, for example. And I believe, and some of them come under the IRS section of the IRS code that relates to nonprofits. So theoretically, a political action committee is not in business to make a profit. It's raising money to invest in candidates. But I think you could easily, I can't do it on the spot, but I think you can easily check that out by going online and asking Google, what are the requirements to become a 504? And I'm sure you'll get an easy answer for that. And of course, I've explained what a 501c3 is, and the vast majority of tax-exempt organizations fall under the section 501c3.
We definitely want to hit on this question. How would my co-founder and I find a SCORE mentor with specific experiences to help us clarify and focus our approach to obtaining our goal?
You can't do so.
You got it. Yeah.
Teresa is the quarterback, and she distributes the ball. And she will look at an incoming request and identify a counselor and ask a counselor to take on the assignment. That's a simple way, the way we operate. And by the way, you cannot beat the cost of our services. We are a total volunteer organization.
And the nice thing is that, even if, you refer to another chapter, because that's where you're from, the SCORE mentors, they work together. And if they don't have answers for you, they will reach out to other mentors and find answers. There's no, I don't know what the word is, but they have no problem in reaching out to help you find the right fit if for some reason they aren't the right fit. So it's a well-oiled machine that works together. So you just reach out to us and let us know.
Yeah, that's absolutely correct. And I would add one more thing. We don't have a big presence on our website for nonprofits, but we're actively in the process of expanding not only our website presence for nonprofit activity. I'm very involved in that process, but we are looking to, if you will, educate more of our counselors on the nonprofit side of the world, so that we have more people able to work with people interested in nonprofit organizations. And that's that. We just had a meeting on Monday of a small working group. So I think we will begin to have a lot more information on our website about nonprofit activity.
Okay, I think we have a couple more questions and then we'll wrap it up for the day. I need to dissolve articles of organization I filed prematurely. I am the only director and officer. Will the corporation dissolve automatically?
I'm not sure the answer to that. I do know that if you don't, as a nonprofit, if you do not file your annual report with the state, at a certain point in time, it will, what's the word, unregister you. So I would contact the Attorney General's office. They have a nonprofit division, and just ask that question, because it's very much a government process.
Great. Is there a typical ratio of staff to endowment size, like times staff per million raised and offered as services?
No, not that I'm aware of. Is this, did I hear endowment? Did I hear the
Oh.
word endowment?
Sorry, let me go back. I
Okay.
pushed it off into my other listing here real quick. Oh, I've completely lost it. I'm sorry. I've lost the questions gone away for me. I don't have the question anymore. Yeah, if you could just resubmit that question. Sorry about that. Oh, it is endowment. Yes. Thank you.
So would you repeat the question then?
See if I can find it. I don't have the question. It's completely left my listing. So we'll have to come back to it if we can repost it. Okay. Is there a typical ratio of staff to endowment size? Staff per million raised and offered as services?
I'm not aware, and I think it would potentially or likely vary depending on the organization. So an organization that has a very large endowment, say a university or major hospital, assigns staff based on the amount of activity with respect to, say, fundraising, administration, and so forth. I've never heard of a rule of thumb for such a ratio.
Okay. At what point in the nonprofit process should one file as a 501c3, and does SCORE help with that filing?
Well, early on, I think the early steps that you want to take, assuming that you're committed to going forward, would be to register with the state so that you get granted nonprofit status, recognized by the state as a nonprofit, and then file an application for a tax exempt certification from the IRS. And that ought to be done as early as you can, because it can sometimes take 4 to 6 months for you to receive a response. And meantime, if you're actively looking to start fundraising, and you therefore want to give your donors a tax exempt, give them tax exempt status, there's something called, let's see what it's called. It's a sponsorship by another organization that is a 501c3. And in that process, you typically would approach this other organization, or maybe multiple organizations, to see if they would be willing to play that role for you. And therefore, and in that case, you undertake your fundraising activity, but donors make their gifts to the sponsor organization, which in turn relays the money raised to your organization. It's a little cumbersome, but I've known of many cases of organizations doing that. And as soon as you get your 501c3, you then terminate the relationship, but it is a way to get off the ground quickly. And that's something that we could help with. As far as assisting with submitting a 501c3 application, we can give advice and guidance. I have actually gone through the application with a client. We don't actually do the work for the client, but we give very intense advice. So you can certainly count on us to be as helpful as possible.
Are you aware of a list of attorneys and accountants who work with nonprofits?
I believe that in Boston, we do have a list. I don't have it immediately at hand, but that's something we could come up with. Yes, there are. I have actually worked with at least one lawyer who's probably one of the preeminent practitioners of nonprofit law. He has a small firm, and he's been at this for I don't know. I've known him for over 30 years, so he's really very experienced and knows his way around. But there are other lawyers. You don't have to go to a big law firm to get that kind of support. You can certainly get it, and we could provide names.
Okay. Can a nonprofit obtain a line of credit?
If you have an asset, you have to have something as collateral in order to go to a lender and request money as a loan, or to even have a line of credit, because a funder, or a lender would not simply write a check on good faith, and it's hard to imagine. But you are sort of in the area of one major area of concern, and that is when you're contemplating creating a nonprofit, you want to think very carefully about where you're going to get your money. So it makes sense to start talking to potential funders. And by that, I mean people who can donate to your organization. It may go to a foundation and seek underwriting. But it is really important to think about the funding, because without money, you're not going to get very far. And I think that's something that many people that feel a lot of passion about their idea tend to give lip service to initially. But money greases the skids, and I think that's something very important to keep in mind.
Okay. All right. This will be the last question. Are employees of a nonprofit required to make under a particular amount per year?
They are required to.
Is there like a cap on how much they can make per year?
Well, in general, no. As long as it's not disproportionate to the budget of the organization and the purpose, the mission of the organization. So, for example, I talked about some of the large institutions that are 501c3, like Mass General or the Museum of Fine Arts. The CEO of Mass General probably makes, I don't know, somewhere between $2 and $4 million a year. That's not a typical nonprofit. I don't know currently what a typical executive director salary is for a small and medium size. It's probably approaching or just over 6 figures. But there are no rules to it unless you are paying an exorbitant amount of money. And that has to be reported to the IRS in your Form 990 tax return. You have to list, I think it's the top 5 salaries in the organization. And one of the reasons they ask that question is because they want to see how much of your revenue is going to salaries. So you do need to be very mindful that it's going to be public information. And that's another point. When you're a nonprofit, you're a 501c3, your 990 form is public information, and anybody can access it online. So you want to make sure that you are not, quote, breaking the rules, end quote. You want to be playing it straight. Is that the last question?
Yeah, that's the last question.
Well, I've enjoyed the give and take, as anonymous as it is. And I want to encourage all of you to be in touch with SCORE if we can be of assistance. It's something we enjoy doing, and look forward to hearing from you.
And I'm just going to throw it out there. Apparently one of your clients is on our webinar today and she labeled you as a rock star. So
Yeah, she did. I'm going to have to give her extra special care.
yeah. Okay. Well, I want to thank everyone for joining us today. We look forward to helping all of you obtain your nonprofit goals. And we hope to see you again on another SCORE webinar. Have a great week.
Goodbye.
Bye.